With me now is Thiago Almeida, Nedbank Corporate Investment Bank sector lead on energy and infrastructure. Thank you so much, Thiago, for your time and for joining us here at the World Economic Forum, Davos 2022. As I've spoken to many of your colleagues, and sustainability of the world, energy, renewable energy is certainly a central focus. Let's just talk about the costing element on renewables. We know that it's come down dramatically over the last 7 years. Do we see increase in demand as a result, increase in demand as a result? Sorry, let me just start that again. Sorry, Thiago. With me now is Thiago Almeida, and he is the sector lead at Nedbank Corporate Investment Bank on energy and infrastructure. Thiago, thank you very much for your time. Big focus here at the World Economic Forum, Davos 2022, on sustainability, on clean energy, and one of the touch points, of course, is the cost of renewables, which have come down dramatically over the last 7 years. Have we seen increased demand as a result of lower prices on the renewable side?
Thank you, Bronwyn, and it's great to be with you too, and thank you for the opportunity. We have seen increase in demand for sure, but not as one might have hoped for. I think when we talk about Sub-Saharan Africa, we need to split South Africa from the rest of the continent. That's very important because they're very distinct markets. If we start with the rest of the continent first, we've seen we see great appetite from both commercial banks, but also from BFIs in playing this space. We see great opportunity for countries and an interest from most countries in deploying renewable energy. Of course, every country has its own particularities, but in general, the appetite is definitely there. One of the issues that we are faced with in the continent is the fact that it's very expensive to develop projects, and there's a very long lead time for these projects to come to market. So although the cost of electricity and the cost of the technology and the implementation of these projects has come down tremendously over the last few years, it hasn't quite caught up, and it hasn't quite delivered on what we would have liked to see. A lot of countries in Sub-Saharan Africa are still very much tied to long-term PPAs, purchase power agreements, that are generally generating electricity from oil and gas products. And that in itself is an issue. And that, coupled with the political instability, the lack of reforms in the sector, is a problem. But it's not all doom and gloom. There are, from the banking side, there are plenty of de-risking mechanisms that are in place and that can be tapped onto with the support of the FIs and the export credit agencies for us to be able to deliver, successfully deliver, and to the right cost some of these projects. But we haven't seen them taken up the way that we would like to.
So one of the key points under discussion here at Davos is the climate transition in emerging markets, and the fact that we are currently seeing about $150 billion on an annual basis going into emerging markets from a climate finance perspective. But in fact, we need $1 trillion on an annual basis to go into emerging markets. We are so far off that figure. Is there any hope? Because all of this is needed in order for us to achieve Agenda 2030 in terms of emission reduction.
So when we talk about SDG 7 and the 2030 target date, the fact that we are in 2022 and we still have in Sub-Saharan Africa most of the people around the world that don't have access to any electricity, and we're talking about I think it's around 550 million people that have zero access to electricity. We're still very far off the mark. Now, we've always said that it was not an issue around necessarily the lack of investment funds that was stopping the development of our ability to reach SDG 7. but really the regulatory framework that we have, and really our ability to deliver these projects faster, in a more balanced manner, in a more risk-free manner. It's very positive to see, and very welcoming to see the amount of funds that are being targeted at the developing economies. We must separate again in Sub-Saharan Africa, and then including in South Africa as well, the urban areas and the industrial areas to the peri-urban and the rural areas. When we talk about peri-urban in rural areas, there's some great work being done by a small number of startups in trying to electrify or support these areas. And we're not talking about just electricity in the home. We're talking about enabling businesses. We're talking about someone being able to charge an electric scooter from their small solar panel at home so they can make a delivery or they can take a child to school. And that's also very important. When we're talking about the industrial, the urban areas, we need a lot of the investments to be pushed through into grids, into transmission lines, upgrading transmission lines, expanding transmission lines. Sub-Saharan Africa has 3 power pools, and those are not often discussed. Now, all 3 of the power pools need support. The Southern African power pool has a better flow of deals than the other 2 power pools. He has been heavily reliant on South Africa, and South Africa, having the current issues that it has with energy supply, has negatively impacted the power pool. But as we are able to focus some of this investment on transmission lines, we'll be able to better connect countries, we'll be able to better share some of the renewable resources, better balance the grids, and therefore improve the situation in the continent.
To what extent, Thiago, are you seeing private-public sector collaboration? I mean, this has been a debate point for, I think, as long as the last decade, and I've sat on stages here at the World Economic Forum in Davos. We've been talking about the need to get private-public sector collaboration. Does it, in fact, happen?
So there are some very good examples where it has gone very well. But I think that we probably don't have enough volume like we would like to see of public-private partnerships. If we take South African, for example, in the REAP program, it's a very successful program in the way that it's structured, in its methodology, in its targets, and so on. However, it has struggled with very long procurement dates, some level of, and as a result, it's been lumpy. And the initial rounds, we're now going to round 6 in South Africa of the REAP program, which is focused primarily on renewable energy. And at the initial rounds, we saw a lot of investments into the continent and into South Africa to develop the renewable industry, not just to bank these projects, but also to support the economy that is required for these projects to be viable and to really flourish. As a result of delays in the program, a lot of the private sector investments that is required to make this a success and a sustainable market has left. So we continue to see projects being delivered, large-scale projects being delivered under public-private partnerships, but they are in lumpy in format, not enough for sure. The ones that are being done, a lot of them in South Africa are very good projects. We have funded a tremendous amount, and so have many of the other banks and the DFIs, commercial banks and DFIs. We are now seeing also an uptake on privately placed PPAs, which is a great market to look at, and it's really flourishing. But when we move away from South Africa into other sub-Saharan African countries, it's not the same story. We've seen programs like Refit and GetFit and Scaling Solar that have caused positive impact, and we cannot say that these programs are better because they are not, but they haven't caused they haven't had the level of impact that we need. So we need more private participation in the sector, and not just on the generation. We need to focus on unbundling many of our national utilities in order to make them more efficient, and to really truly be able to include the private sector, not just on the generation, but on the transmission lines, on the distribution network, on collection even. Collection is a key problem that we have in the continent. And if we can't collect, we can't service these debts. So there's a lot more space for private participation in the sector.
Thiago, thank you so much for joining us here at the World Economic Forum Davos 2022. I've been speaking to Thiago Almeida, Nedbank Corporate Investment Bank lead on energy and infrastructure.
Thank you very much, Bronwyn.